Hi, everyone, and welcome to our webinar on work comp premium audits. My name is Jacob Cole. I'm the marketing coordinator here at CID. Today, Darby Fisher, our work comp underwriter, will be sharing her expertise and helping you better understand premium audits for workers' comp. So before I pass it off to her, I wanted to quickly go over the logistics of this webinar. As you can tell, you're all muted, but there's a chat feature, so you can type your questions in at any time, and we'll answer them throughout the webinar. Also, a short survey will pop up after the webinar, so you can help us improve these webinars for you. We appreciate you taking the time to fill that out. And without further ado, I'll pass it off to Darby.
Good morning, everyone. So as Jacob mentioned, today we're going to be learning how to understand how an audit can impact your policy premium, what documents your insured is going to be required to prepare and submit, and what to expect during the process. There's a lot of different things that can occur, things to gather and look out for, so we're going to go into depth on all of those. So the purpose of a workers' compensation audit. Everyone works hard to write new business and keep their renewals, and one of the easiest ways to lose your workers' comp is non-compliance of a final audit. I want to provide you with a better explanation of the audit process, what the carrier is looking for to help you manage the policy effectively and help the insured comply. As many of us know, it could be like pulling teeth to get an insured to comply with the audit request. So the workers' comp audit serves as an annual verified review of their payroll and tax records at the request of the insured's insurance carrier. The audit process allows the carrier to determine the final cost of any workers' comp policy once that policy period ends. And this checkup ensures that the payroll for the policy period was accurate and the carrier does have the most up-to-date information on the company, its employees, and its locations. So before the end of the policy term, the insured will receive a notice directly from the carrier regarding their upcoming final audit. They're going to receive an audit questionnaire listing the items needed in order to comply with the final audit, along with a blank form for the insured to fill out. So these notices are going to be sent by mail from the carrier to the insured directly. So ensuring the insured's mailing address on file when you're binding a policy or even renewing it is imperative, and this will avoid a lot of miscommunication. As a broker, you can also request a copy of this directly from the carrier or reach out to your wholesale broker to provide you with it. So this request, again, it's going to detail all the information needed to be provided to verify payroll and class code. And we're going to discuss those items in depth a little bit later in the webinar. So make sure to be in contact with the insured during this time. The insured typically has 30 days to comply with their final audit. So a lot of the times a broker comes to me maybe a week before the due date requesting additional time for the insured to complete the audit. And unfortunately, carriers are extremely strict with the due date, so additional time wouldn't be granted. So it's important not to let this slip to the wayside. Usually the carrier will request that the insured complete a voluntary workers' comp audit, so the insured will submit their completed final audit by mail or online to the carrier. However, for larger accounts, carriers will sometimes assign the insured to an in-person or phone audit, which requires additional information to be provided. We will discuss those in depth as well a little bit later. So once you have completed the physical or voluntary workers' comp audit, the processing is typically anywhere from 30 to 90 days from the submission date, and then that audit will be issued to the broker and the insured direct. So if a large amount of premium is owed at the end of the audit, just a note, most carriers will offer a payment plan if needed. So what should the insured know? A few points to mention that are important for your insured to be aware of is the final audit is mandatory as part of your insurance coverage and is going to occur after each policy period. Even if that policy is canceled midterm, there's still going to be an audit on that policy period, even if it was in force for, let's say, a month or two. It's going to verify payroll, class codes, and subcontractor exposure. So it's good practice as the broker to set a reminder to check in with the insured around the time that their policy is renewing to see if they've received an audit request. In some circumstances, the carrier may request additional documentation, a phone interview, or both, depending on the information that's provided. So make sure to be on the lookout and be in constant confirmation with the insured during this time. So the information required, this is the most important step in preparing your premium audit, is to have the appropriate records organized and available for your audit. This is going to include payroll summaries for the policy period, payroll tax reports, 941s for the last 4 filed quarters, but some other information that may be on the request from the carrier is subcontractor records, overtime wages, list of employees and their duties. As I mentioned previously, the audit form, it will provide exactly what the carrier is looking for, and then if they come back requesting additional information, they'll be specific. So you don't have to worry about not knowing what to submit. Everything's pretty clear from the carrier standpoint. So when completing a final audit, your insured can be assigned one of 2 types, a physical or a voluntary. Physical audits are typically assigned to those with a higher exposure, such as contracting or manufacturing businesses, or businesses that have a high payroll exposure. Physical audits are performed within 60 days after the policy expires. And a physical audit is usually performed at the place of business, but it could take place at another location, such as an accountant's office. If you have any general questions, you should contact the insurance carrier before the audit appointment. So the insured will receive this notice that the policy period has been assigned a physical audit. At that point, the carrier will contract out a third-party vendor, and that vendor will be assigned to contact the insured directly to set up a time and date. This is where I see problems begin just due to communication issues. Either the insured isn't aware of who the audit vendor is, so they aren't answering the phone, or the contact information on file with the carrier isn't correct, so the vendor isn't able to make contact with the insured. So when binding a policy, contact information is required by the carrier. So it's important that that information you provide to them is the person who's going to be aware of the audit or submitting the documents, because that's who they're reaching out to. If contact information does need to be updated for the business when the audit request or notice is initially sent out to the insured, that's the time to do so. That can also be done at any point throughout the policy period if you're letting the carrier or your wholesale broker know. So the audit vendor will send a list of documentation that the insured will need to provide them, payroll summaries, employee records, 941s, DEC-9s, certificates of insurance, all those things we went over, and the insured will receive a list of those as well. If the insured does not set up a time and date for the audit to be conducted or documentation is not submitted, the audit will be marked as non-compliant or delinquent by the carrier. Obviously, you want to avoid this with any audit, but the physical is especially difficult because there's multiple parties involved. So the audit vendor will have to be reassigned to the insured, another attempt to contact the insured will be sent out. And like I said, because there's more parties involved in a physical audit, completing it from the get-go saves the insured a lot more time. Voluntary audits are that second type. You're going to see this with most of your insureds. They're assigned to risks with lower exposure, smaller payroll, such as retail stores, professional office risks, small HOAs. As I mentioned previously, that audit notice will be sent out to the insured before the policy term expires, and that notice will provide the documentation required to be submitted and the directions on completing the audit. The carrier will mail a copy of the blank audit form to the insured for them to complete, and so they can return that back to the carrier via mail or fax. The broker can also submit the form on behalf of the insured to the carrier. I prefer typically that I ask just like the insureds to send the documentation back to me. That way I'm hands-on and I can assist throughout the entire process, tracking once the carrier's received it. And then once the carrier does receive information, the final audit will be released 30 to 90 days after that. So the biggest problem I come across with audits is uninsured subcontractors. Businesses such as property management, homeowners association, or contractors may utilize subcontractors from time to time, but they fail to check that that subcontractor has their own workers' comp coverage in place. It's a common misconception to assume a subcontractor has their own coverage. So for best hiring practice, make sure to confirm with any insured before hiring a subcontractor that they have their own workers' comp in place. Otherwise, at the time of the audit, the subcontractor payroll will be included, and this can generate thousands of dollars owed by the insured. So at the time of the audit, when the insured is submitting all of the other payroll records, summaries, quarterly reports, the insured should also be submitting a certificate of insurance for each subcontractor they've used during that policy period. Now, the certificate, it needs to show the following information to have payroll excluded. One, it shows that they have their own workers' comp coverage with their own carrier, and two, that that coverage falls in line with the insured's policy period. So I've assisted with many audits for my insured. This is the largest mistake I see. Oftentimes, a COI is submitted and it's only showing one requirement, other cases none at all. So if these requirements are not met on the certificate of insurance, which I provided one to the right, just an example of what it should look like, if those aren't met, then the subcontractor payroll will be included in the final audit. So some changes that can affect the final audit outcome. When you write a new policy or you're working with the insured on a renewal term, discussing changes that can affect an audit is very important. This could be throughout the year, but at least during when the renewal is approaching, and if you're writing new business, the bulleted items are important areas to pay attention to because things change and a lot can happen. Here are some of the questions you want to ask. Did they expand? In that question, you'll find out if they've added another location, as locations are super important because wherever that insured goes to work, it must be reflected on the policy in the case of an injury. In an expansion, the insured may have hired new employees, and in doing so, that's going to change the payroll, and oftentimes, insureds can owe a premium at the end of the audit because that payroll was not accounted for at the beginning of the policy term. Employees performing new duties could change the classification that they're reported under, and that rate for the class could vary, which could increase or decrease the premium if you've moved an employee under another position without notifying the insurance carrier. For subcontractors, we need to ensure that they carry their own workers' comp coverage. COIs are going to be required. So otherwise, their payroll will be included in the audit, like we mentioned. So you want to make sure to pay attention to these items in order for you to not have to have pickups with the insured. A lot of times, these are the things that can upset the insured more than anything when they're wondering why they have such a large premium due at the end of the audit. So there's one more change I want to discuss, and I'm giving it its own slide, and that is the entity structure changes. These can create a lot of confusion and issues for the insured. So a lot of entity changes I process are for changes that actually occurred months ago, sometimes even years, and our broker's office is being notified of the change for the first time. So delays in notifying your broker of an entity change can greatly affect the final audit outcome. So having those constant conversations with the insured will help avoid this issue. So for instance, if a business went from an individual to a partnership or an LLC to a corporation, not only does the change need to be filed with the Secretary of State, but also with the Insurance Bureau and the insurance carrier. Additional documentation needs to be collected, and filings need to occur with many parties, so it's important to be aware of any entity structure and ownership changes. How these changes impact the audit significantly is because of the need for updated or new exclusion forms to be on file with the carrier. So anytime there's changes like this, new exclusion forms are required for the new owners. Otherwise, those owners that were not accounted for would have their payroll included at the time of the final audit. I want to give an example of one I just processed. This business was initially a sole proprietor and changed to an LLC with multiple owners. So they're going from having one owner at 100% ownership to multiple officers with split ownership. So the insured would need to file the change with the state, notify their broker's office, and so they can report the change to the carrier and the insurance bureau. And this change in ownership will affect the final audit and the current policy as well, because each entity type has their own set of rules and forms required in regards to excluding officers. So a sole proprietor is automatically excluded from coverage, but having changed to an LLC would require them to obtain exclusion forms for all officers. Otherwise, their payroll would be included at the time of the final audit. So things to be aware of, making sure that exclusion forms are on file. You don't want the owner to get slapped with a huge bill because they did not submit an exclusion form at the time of finding a new business or at a renewal. So non-compliance, how it affects the audit. If the insured fails to complete their final audit, it's going to be marked as non-compliant. In result, one or more of the following items can occur to the insured's policy. So due to the lack of information, the carrier has to complete the audit. So the carrier will mark it as non-compliant and charge up to 2 times of the originally estimated premium when a policyholder does not submit the requested information. Some carriers will estimate the final audit with all payroll in the highest rated class code, resulting in additional premium due, while others will release the final audit with a costly audit non-compliance charge. So these charges can be anywhere from $5,000 to $35,000 on top of the original premium. So the non-compliance charge is intended to compel policyholders to comply with the requirements necessary to complete the final audit. So if the audit is not completed, the non-compliance charge will stand and the insured will have to pay the dramatic increase in premium. In addition, failure to cooperate with the audit may result in a cancellation of their renewed policy term. So if that policy cancels, the insured would not be able to find coverage with another insurance carrier until the outstanding audit is completed, which, can deter your book of business from growing. The last outcome of noncompliance is the carrier will automatically endorse the current term to match what was reported on the insured's final audit, whether that be a completed audit or estimated, and that, of course, can increase the premium. So I want to stress all of these are not great, and the importance of complying with your final audit is super important. As you're now aware, by not doing so, it's just going to cost the insured and you extra time, work, and money spent. So to resolve a non-compliant audit, the insured will need to submit a request to the carrier to reopen their final audit. At that point, the carrier will give the insured a specified amount of time to complete it. The insured will need to comply with the request, the original request, with all of the payroll documentation, audit questionnaires, any information that's needed by the auditor. Additional questions that the carrier may have, they may end up requesting a phone interview if necessary. So ensure that the insured is aware that the carrier will contact them if necessary. For physical audits, the vendor will be reassigned to the policy and contact will be made directly to the insured to set up an appointment again. Once the insured has complied, that non-compliance charge, if or estimated audit, that will be rescinded and a revised final audit will be issued. So when to dispute the audit. So how can you tell if you need to file a workers' compensation audit dispute? There's a few things to look for. One, the audit payroll does not match what you reported. The payroll is distributed differently by class code or the owner's payrolls than included in the final audit. If you notice a mistake on your final audit, the first thing to do is request an audit worksheet from the carrier or from your wholesale broker. This will give an in-depth analysis on where payroll figures came from, subcontractor costs, owner information, So once the discrepancy has been identified, the insured will need to submit a formal audit dispute to the carrier along with the supporting documentation to back up the revision. If the insured's not providing the supporting documentation, then the audit is not going to get disputed. So that is a requirement. And the formal audit dispute, it does need to be on the insured's letterhead and signed by the insured. So I want to stress the importance of making sure that the insured keeps a record of everything they've sent to the carrier in the case that they do need to dispute their final audits. Again, if you submit documents to the carrier on behalf of the insured, that's another reason why I like the documents to come directly to me, is so I can have record of everything as well in the case the insured can't find something or doesn't know where they placed it. So it's just another person who has eyes on the audit. So the best practices for completing the final audit, although they can be frustrating for the insured, encouraging them to comply with the request sooner than later can help ease the process. Help your insured understand the penalties involved with the noncompliance, whether that be a cancellation or charge or an estimated audit. It's important to keep records of everything that the insured submitted in the case that they need to dispute. Check in with your insured on any exposure changes during the policy term, location, payroll, employee count, subcontractor exposure, or entity changes. And remember that that audit request is being sent out to the insured when their policy term is about to renew. So making sure that contact information is correct, that's on file, is going to be really important in delaying any issues and potentially having a non-compliant audit. So I'm going to get that back over to Jacob now.
All right. Thank you, Darby. If anyone has any questions that that weren't answered during the webinar, now's the time to chat them in so we can answer them before we sign off. And after we do sign off, I encourage you all to browse our website. We have tons of tools for you and your office to use, including marketing materials, proposal templates, fillable applications, online quoting options, and a ton of recorded webinars on different lines of business and coverages. So don't hesitate to reach out to Darby if you have any work comp related questions, and you can start sending us your submissions to the submissions email you see on screen. So if we don't have any more questions, that'll do it for today's webinar. We appreciate you all joining us, and we look forward to doing business with you. So have a great day.